So would you like to get into property development, but you always thought that you needed a lot of money? Well, the reality is you do, but do you know you can borrow most of this money? My name is Ritchie Clapson, and welcome to the Open Door Show. And on today's show, I'm very pleased that we've got one of our old friends here, Rupert Lowe from CrowdProperty. Rupert, welcome to the show.
Thank you very much, Ritchie. Thanks for having me. Great to be here, and looking forward to a chat.
Yeah, it should be good. Well, we're going to chat all around money, and the reason we're going to chat around money, because CrowdProperty, well, what do CrowdProperty do, Rupert? They do something with money.
In essence, we lend money to developers. And when I say developers and we say developers, don't think that's new build straight away, has to be ground up or anything. It has to be something where you're going to be adding value to a property, basically, in essence, or a site or something like that. We lend on residential or predominantly residential. And when I say predominantly, that means we will look at mixed use, which is traditionally ground floor commercial, but residential above. So we lend on C3 residential. That's what our bag is, if you like. I come from a property background, which is commercial agency for many, many years as a surveyor. And I get so many old clients ringing up saying, can you lend me to build our sheds or our shops or our offices? We don't do that. We're happy with the ground floor. But we lend money and we try to make it so much easier for the developer out there. It can be refurbishments. It can actually be a title split. So you may not actually be doing any work to the property, but you're adding value through whatever you're doing. And it can be the new build, it can be modern methods of construction, etc., etc. We might touch some base on that later on. But we will lend money to help to buy the asset if that is required. And then we look to lend 100% of the costs of works. And then if there are margins, we can help out with other costs such as Section 106 payments, SIL payments, and even potentially professional fees. But we don't want to lend people more than they need. We are property people, we get it, we understand it, and we want to really work together to make sure the developer has every chance of success, which is what we're all about, because without them, we don't have a business.
You're nothing.
We are nothing. We don't. Our investors have nothing. Our institutions that we have nothing to invest in. So I once did a presentation to a room once, and a guy came up to me after and said, I went cap in hand to my lender. And I said, don't ever say that again. If you feel that you are intimidated or you're scared, it is scary. Don't get me wrong. It can be very scary going out if you haven't done it before to borrow money. We get it. We totally understand it. We try to make it so much easier. But if you're going really feeling that you're on the back foot, that is the wrong way to be. You should be coming forward saying, I've got this project. Is it of interest? Will you support me? If we can't, we'll tell you why, or the developer why. If we can't because there's no profit in it or there are issues with it, we'll say no very quickly, but we'll do it hopefully in a very friendly way. And the idea is success and come back again, and we create a team. It's not them and us. This is a two-way street, and everyone's got to feel comfortable. We've got to be available. We've got to be readily available to answer calls, emails, go to site, etc., etc. Similarly, the developer has got to deliver. They've got to trust us. But it is a team effort, and that's what it's got to be about.
We talked about, then you mentioned about lending on residential. Let's just make sure we clarify that. There's a lot of people that might be watching this thinking about, well, what I want to do is buy a commercial and turn it into residential. We are talking about covering that type of development.
We are. I mean, you know a bit about that, don't you, at the end of the day?
I know a little bit.
A little bit about commercial to residential. Great expert. If the other thing, get tutoring, get mentoring. This guy, absolutely superb. And propertyCEO and Open Door, thanks for having me today, in case I forget to say it a bit later on. But anything that...
You're not getting paid for that, by the way.
Right, cut. But anything where the end result is predominantly residential, so the predominantly, again, is the ground floor commercial. If planning is required, so let's say it's site, the way you are going to do a new build. If planning is required, we need at least outline planning consent for residential before we can lend on it. We can then do a bridging loan on that whilst full planning is obtained or whatever. If it hasn't got planning, we can't lend on it if it needs planning. If we're going straight to development finance, and this can be conversions, it can be new build, it can be anything, but it requires planning. If we're going to development finance, day one, we need full planning in place. And this is really important, particularly where people do subject to planning deals. Subject to planning deals, they'll turn around and go, so once we've got a satisfactory planning permission, no, don't make that part of the deal. It needs to be implementable planning permission. That's really important. And the key thing that people may not be aware of is we need all pre-commencement planning conditions to be discharged before we start a loan. Really, really important. So if you're doing a deal subject to planning, make sure you've got time, once that planning has landed, to get rid of and discharge those pre-commencement conditions. Then we can start the loan. We don't want delays. And a lot of things with pre-commencements, we had one recently actually in Lancashire where I went on site a year last November. New build 6 houses, great scheme. Really, really good. First time developers, teachers, husband and wife teachers, got a great team around them, which we need as well. So if people are first times out there, if you're first time, come and have a chat to us. We don't mind. We work together. We build a team together and make sure that everyone's comfortable. But they came to us and their contractors, if you like, said, we'll start in June last year, 2024. So we said, okay, fine. So we all worked towards June. The site got valued in April. Great. Valuation has a shelf life of 6 months, generally speaking. No, we're going to be discharged in June. And there was one pre-commencement, which was to do with drainage, which got discharged in December.
So had the whole delay.
The whole 6 months delay. Now, and they were really, really keen, we want to start the loan in June. And we're going, no, you can't. Now, if we'd started the loan in June, they'd have paid 6 months interest without being able to put a spade in the ground, which is absolutely kill the deal.
Yeah.
Where's your profit?
No benefit to
them. No whatsoever. So people do get a bit frustrated when we say, no, you have to have that piece of paper and you have to have all these ducks in a row kind of thing. But it is to help the developer. I come back to, we're property people. We put ourselves in the shoes of the developer. We don't look at the project as a deal and how much are we going to get out of it, fees, and how much are our investors and institutions going to get out in terms of interest. It's no, if we were on the other side, how would we want to be treated? And that's how we work on every project. Doesn't matter how big or small it is.
Let's just have a think about the money, okay? Let me bring us back to the money, because there'll be a lot of people who are watching this show and perhaps thinking about getting into property development, because why not? It's lucrative. You can make significant six-figure sums. But they might have come from an industry where to borrow money is quite complex and quite complicated and very difficult. Why is property development got so much money, let's assume it has, readily available?
I think there are great returns out there. So our retail investors are getting up to 9.5% return. Their money is at risk. They know that. They have to pass various exams or tests or whatever you want to call them with us before we allow them to invest with us. But they can see great returns. And I think from our point of view, they like to invest with us because they know we're property people. They know we're actually thinking, well, we're putting this to you because we believe in it.
Yes.
And I think and
understand it.
Yeah, absolutely. I mean,
hopefully. Says.
I mean, the funny thing is that I'm a chartered surveyor for what it's worth. I qualified in 1997. I was working with Gerald Eve at the time in Liverpool and had a Liverpool office. And my background is agency, but I've bought and sold and let predominantly commercial agency, but sites for residential over the whole of the UK in every sector. I mean, I've sold churches, I've sold convents, and also bingo halls. You can't get on flip sides and nightclubs and all sorts of stuff like that. So I know I had to value those properties. Now, I didn't value them Red Book, which is RICS valuations, which we do get valuers to do for us.
So Red Book, people might have heard that term. What is a Red Book valuation?
So RICS, Royal Institute of Chartered Surveyors, these valuers are essentially putting their neck on the line and saying, we believe this is the value for this. So we ask them for 3 values, and we'll send them out. The developer will pay. To start off with, we'll give a decision in principle. We can come back to what we need for that. Once everyone's happy with that, we then do a credit check. There is a charge of £150 for that. We just make sure everything's okay and everything's in order. And then we will go to valuation. We will get quotes. And the Red Book valuers, as I would call them, they will come out and they'll provide a quote, a valuation as to what the asset is worth as at today.
Yes.
What the asset is worth in terms of gross development value after the value has been added.
Once you've developed
it, at the end of the loan, when you're going to sell or refinance, what's that value going to be? And then we do have to, I'm sorry to touch on it, but we do have to also ask for what we call a forced sale valuation, that if it really goes badly wrong and we have to step in to protect our investors and institutions, then if we have to throw it in an auction, let's just say, or a fire sale or whatever you want to call it, what's it likely to be worth then? That's just in the worst case. We don't like talking about it. I spent 5.5 years working for a firm called Edison's in Leeds and Manchester, doing insolvency agency, very cutthroat, very ruthless. We understand it. We understand what it's like to be on that side of things. We understand how the mechanics work, which is why it's a very, very last resort for us to have to go down.
But it's a business, isn't it? We need to know how it works.
So we ask for those valuations. That's the key.
So we've got a lot of money out there, and I guess for a lot of people, it's this understanding that there is an abundance of money out there in the economy. It's where that money gets placed. Of course, in property, it's a secure asset. It's always been one of the most secure assets to go into. So you mentioned a point earlier, and I think I want to pick up on that, which was really interesting, about coming in and, my words, being subservient to the money.
Yep.
You need to come in with confidence and know what you're doing. If you come in cap in hand, subservient, you're not going to get that money, because the deal is the key thing, isn't it? Because there's more money than deals. Would you agree with that?
We have got, at the end of the day, you use the word abundance. There are so many lenders out there, and there are different people for different projects and different developers. There really is. And we may not be for everybody, but we bring a different angle to lending. But our CEO, Mike Bristow, who you know very well, he's constantly talking to institutions. If you talk to Mike or listen back to his presentations or podcasts or whatever the case may be, when he and his partners set up CrowdProperty in 2013, and they set it up, as you probably know, because they were trying to borrow money for their own projects and finding it so difficult and very, very frustrating to go to people who didn't understand property, asking the wrong questions at the wrong time, didn't get it, didn't understand, weren't actually caring necessarily about the developer. And that's why they set up CrowdProperty. And he used to say, and will say today, he'd go to institutions at that stage, so big funds and lenders, and they'd sort of almost pat him on the head, turn him around and say, go away and grow up kind of thing, or your business, so to speak.
Yes.
Now they're approaching us, it's a great flattery to, I'm jumping on the bandwagon here, but hats off to the guys and all the hard work that's gone on, which is brilliant. But that shows there is money out there. There is a security of assets. So working on the basis of the security of the asset, well, why do people lend on it? Well, because to buy it, we might go up to 70% gross loan to value to help
the purchase of the
purchase. So that's a gross figure. So a lot of people, I stress that a lot, because a lot of people come to us saying, I'm going to buy something for 100,000, you're going to give me 70,000. No, you're going to pay for 70,000, but out of that will come some fees and interest and whatever. You're going to pay our legal fees. You're going to pay an independent monitoring surveyor fee if one is needed. That's a QS, obviously, who'll set out the program of works and how it's going to look and everything. So the net figure comes down. So the developer is going to bring in substantial equity on day one. It's going to be around 50%-ish. Now, it changes with every project. It really does.
Every project is very, very different.
It's massively different. But that's a gross figure, the 70% net. And we can actually go up to 75% on certain deals. But if we focus on the 70%, therefore, if things were to go wrong, and I don't want to focus about that because that's not how we operate, then to take that back and get the money back for the investors, it's relatively secure for them. And therefore, it is, as you say, a very good industry to invest in and good returns.
So the deal's the important thing. The money's in abundance. You have a load of money ready to lend. Okay, you didn't bring it with him today, but I think you've got it somewhere. It could be in his car. I might go and check in a minute. But we've got this money ready to lend. But I might be watching this and listening to this show and thinking, well, yeah, but I'm brand new. Why would they lend to me? Well, I've talked, it's about the deal, but the deal and then the team is important. It's less about the individual, isn't it? Can you just explain why that is?
For us, it is massively so. For other lenders, it may be different, but I can't speak for other lenders here today. For CrowdProperty, it is about understanding that our founders and a lot of the team, have been involved in their own projects and had to start somewhere. I never forget being an agent walking into the office, into the local pub, because we did back in the 1990s, and people putting their arm around you, welcoming you to the fold. And that's, I think, how we look at it in terms of your first time. We can do it selfishly. We can do it from the point of view, you're a client for life. Yeah. If we look after you, you're a client for life. Yeah. But that works both ways.
Of course it does.
But also, we've got people who've borrowed from us 6, 7, 8 times, and now they've moved on and they've gone into different ways of sourcing their fund. That's good. That's fine. Good luck to them. They've grown and they've done whatever they've done. But to do it for the first time, second time, whatever the case may be, I think it really helps to have somebody who understands, who actually cares, to be honest with you, and who will help as well and guide. There's nothing better. I had a Zoom with somebody, other virtual meetings are available, but I had a Zoom with someone the other day.
Other virtual meetings are available. Isn't it weird, though, that we've got into that word? We're having a Zoom call. I mean, Zoom just cleared that up, didn't they?
Unbelievable. Unbelievable.
I mean, it's like Hoover, isn't it? Yeah. Hoover and all these other things.
Absolutely.
You don't. You vacuum. No, we Hoover. We have a Zoom call.
Absolutely. But I had a chat with him, and the guy was very knowledgeable. His background's design. Because I was having a chat about his background, getting to know him and everything else like that. And at the end of it, I said, was that useful? And we had 40 minutes or whatever it was. And that's part of my job, and no problem. A lot of it's speculative, and not all of it works out. But he said it was really helpful. And that gave me a warm feeling, because hopefully he'll now go away, right, I can pick up the phone to him anytime I want. And so we want to be approachable. And if we do say no, don't go off and be, they don't like me. We don't judge, we don't score, we don't do anything like that. We are very much new. Let's have a chat about it. So I can send out decision in principle, so initial figures, very, very indicative figures to start with. If it doesn't work for us, I will still send the figures out, and I will say this does not constitute an offer, but let's have a chat about it. We can do it virtually, or we can do it over the phone, so I can explain the costs of finance, because if you haven't done it before, the number of people, understandably, come to us and say, I'm making 30% on this, but they haven't put the cost of finance in. Yeah. And you're not making 30%. And we've got to have, every deal's different, as we often say, and it's true. And therefore, we look at what we call profit on cost. After the whole costs of your project, what are you going to be taking home, so to speak? And the key for us is, for different projects, we would ideally like to see 20% profit.
Yep.
The market's tough. We've been tough for a long time now. And the costs of materials rocketed, as we well know, and they haven't come down to where they should be.
Well, they go up, but they never come down,
no,
do they?
Don't. And they should do. They should do, but they don't. So because of all that, we'll look at 15%. So again, applying property sort of mentality towards it, and what would we do, and what would we be happy with, and whatever the case may be. But also another thing, if they are the developer's looking to refinance and hold for long term, so looking for rental income and capital growth, we'll look at 10%. Now, it does depend on whereabouts in the country it is. It does depend on what type of projects are. So all of these discussions and comments are generalities, but let's have a chat, and then we can get to know and apply what works for each project.
But if we go back to that, the point I wanted to think of as well, it's the professional team that we need to add to this, isn't it? Because if I come to you and I've got no experience, I come out of being, an IT manager, an accountant, but I want to get into property. I want to earn these six-figure sums. The money's out there, but I can't learn to be an architect, a project manager, a structural engineer. It's the quality of that team, the professional team and the contractor, that you want to see. It gives
us confidence and comfort. And there was a phrase that I don't use, but I'm about to, the power team. Now, I don't like that phrase.
I hate it.
I can't stand that phrase. But because if I was going to do a light refurbishment, a property flip, buy a terraced house, whatever the case may be, an HMO, whatever the case may be, and someone starts talking about the power team, that would scare the life out of me. It really, really would. Now, if you are going to, I'll tell you a quick story. If you are going to do a ground up, yes, you are going to need your planners, your architects, your quantity surveyors, your cost consultants, etc., etc., etc. The list goes on, as you know. But if you're going to do a light refurbishment, you're going to need your trades and your local contractors and things like that. But the team, you need to deliver. That's the key. We've got to have confidence that the project will be delivered, ideally on time. And that's another thing we can talk about, because you've got to be careful about time. But ideally on budget. But again, we need a contingency in there and so. But the team around, and even if somebody is very, very experienced, we still want to know who the team is. We still ask for CVs of the team, because we want to see who's coming on board. And sometimes we can turn around and assist with that. We can't recommend anybody. We're not allowed to. We're FCA regulated. We're not allowed to make recommendations. But we can say, we've worked with these people before. Yeah. And we've done recently, we've done there's a note, a blog on our website in terms of solicitors we've worked with before, on the other side, so to speak, to help. We can't say we recommend these people. We can say pick up the phone. But we've also had things down to timber frame suppliers. And we've had a proposal. We're going to use these people, and whilst we don't sit there with a big stick because we are not a big stick lender, we turn around and say, sorry, you can't use them. We've come across them before, and quite frankly, we wouldn't be comfortable.
Isn't that advice that we want, though?
Hopefully, yes.
With the depth of experience you've got of seeing lots of projects go through, you're going to get those names which you see are not performing. So you're going to make a comment. You should do.
The same about solicitors. Well, everybody, but solicitors is a massive thing because the number of times, and again, stories. I like to tell a story. We had one solicitor and one developer who came to us. And they said, we're going to use these solicitors. And we said, please don't use them because they have no knowledge of contractual law for construction as at the end of the day. Very, very complex, very detailed. And we said, they don't have the knowledge. This is not going to be good for you. And they said, they've been our family lawyers for 30 years.
Yeah.
Oh, please don't say that. And essentially the loan, which was of quite a size, to be honest with you, was delayed by about 12 months. Because they insisted, and we said, well, okay, they're your team. We recommend you don't do that. And before you know it, they did nothing. They were instructed. They did nothing for months and months.
They don't understand it, do they?
They didn't understand it. And no one likes to turn down an instruction, but I've always had it in my mind that if someone came back to me in an agency and said, I'd like you to let this property for me, if it wasn't going to be for me and the company I worked for at that time, I'd turn around and say, look, I can't give it the time it needs. So this is the person who's probably best to look after it for you.
Same thing here. I mean, my background is property development through and through, over 40 years. And then people start asking me about HMOs or buy-to-lets, and I go, I don't know.
Yeah.
Now, I actually know a fair bit, but I don't know. I'm not the right person to advise you. There's plenty of other people out there. Go and have a chat to them. And equally, I don't enjoy talking about that sort of stuff. But I think it's a really good point. Not all property lawyers, not all accountants, not all professionals equally are equal. You've got to get an architect that's used to doing that right type of project. So this professional team, absolutely key. It's about the deal. It's about the professional team. Yes, you're important, but you're running a business. That's what we want to see. Yeah. And so this whole point is come to you with confidence that you've built a team and you've got a good deal that stacks is absolutely key.
It is. To start with, I would say don't worry about the teams day one. To come to us and just say, what do you think about this? It literally, because we've got so much tech and technology and data and everything, and the guys in the team and the engineering team back in the office, they make my life and other BDMs, etc., so simple because we can run appraisals very quickly. So literally with headline figures, that's what we encourage on day one. If it starts to stack up, then it's very much, right, now we need to start really thinking about this.
But a bit more meat on the bone.
You've got to start thinking about who's your team, getting quotes in, making sure, because the last thing we want to do is have developers start incurring costs. So even the credit check, now it's 150 quid. That's 150 quid. We don't want people to go down that route if we're unlikely to lend to them. It does help paint a picture for us to put to our investors and our institutions and make recommendations to them that you should back this. That's really important. But then the next stage is the valuation. They're not cheap. So we want to start making sure before those costs are starting to be incurred that it's starting to piece together rather nicely.
When should people approach you? What's the process? We're talking about don't expend too much money on deals, but if you're out there and you're thinking, well, I don't have any relationship with any funders, people might be, perhaps you're listening to this show today and thinking, these are property people, so they'll understand me, they'll understand the business I'm going into. Is it worth putting in a call and having an initial chat to explore the journey I would want to go on as a new developer?
100%. And even if you haven't got a project, still pick up the phone. Get to know us so we can have a chat and we can understand, and also the developer can understand what our appetite is and what we're looking for. We lend from 100,000 to 10 million. We really lend from 100,000, and that can include the acquisition as well. So we will look at the projects that literally are starting out, and we will go right up to the 10 million. We do the whole lot. So if you've got something, or if you haven't got something, just want to have a general chat about what's it like, how does it work, what do I need to bring to you?
Yeah.
What are you looking for? And then we can tell them the number of people who turn around to you and say, so I can send you all these spreadsheets. I said, don't send me spreadsheets. I want headline figures. Don't send me spreadsheets because I don't get on with spreadsheets and they don't get on with me. So therefore, at the end of the day, these are, I think I've got 14 bullet points. Can you just respond to these? Headline figures, don't get worried about too much accuracy at this stage. We will refine things as we go. It's the same on our application on our website. It takes a few minutes to fill in, and it is literally bullet points. And everyone can come to me directly, or they can go through the website.
So it's engage with you, start building those relationships, and then you can give that feedback and steer people in the right direction. Let's just talk about, perhaps if we can, briefly, the marketplace. We're here early in 2025. Perhaps you could reflect on, from CrowdProperty's point of view, and where you saw the market in 24, and where do you see the market, I think more importantly, going in 2025 for new developers? Is it a place we should be or not be?
In essence, it's not easy to find a deal. We know that. And therefore, it can be a lonely place for developers out there. It can be a scary place, it can be daunting. We get that. And that's why come and pick up the phone and have a chat with us. It's not easy, and it's a patience game, and it's a big game of discipline. And even if the developer has put in some money to start with, to start refining those figures and get costs and whatever the case may be, if you find something that means it's not working anymore, you've got to walk away or renegotiate or do something to make it work. So
get the emotion out of it.
It's so easy to say it, Richie, as you know. To do it is really difficult, but discipline and patience is massive. And the market is tough. 2024, I would say, was a year of uncertainty. Indecision is probably a bit unfair, putting things on hold, waiting for things to happen. So from my point of view, it was sort of very much indeed in terms of, well, we're waiting for an interest rate cut. Now, a lot of people will think an interest rate cut will immediately go through to development finance. It doesn't, I'm afraid. It will help on the mortgages.
Why doesn't it do that? Can you just explain? Because a lot of people would expect that. If you're buying your sort of buy-to-let mortgages, it's going to reflect quite quickly. Why doesn't it on development funding?
Because my view is it's very much more complex. It's very complicated, and how the deals are done with institutions, for example, how it's all set out. To start renegotiating with institutional money, which is really important to have, by the way. So, we have our retail money, which is the person in the street who could put a minimum of £50 into a single raise of money.
Yep.
And if we did it 100% of that, and there were a number of raises because the money's being drip fed through to the project, and let's say halfway through there's a mini budget, and the retail money decides not to turn up,
they get a bit panicky.
They'll say, I'm going to leave it in the bank. Yeah. Now, it's always turned up. I will say that it's always turned up. But if I was a developer partway through, and I'm going for my next raise of money to draw down from, and it doesn't turn up, I'm partway through a scheme. What am I going to do?
I've heard some horror stories of that in the past, where people have gone, because there are a lot of lenders out there, and really, I think, one thing, go to people. CrowdProperty aren't a recommendation of ours for all the right reasons, but they wouldn't be sat here if we hadn't worked with them, and some of our students have worked with them. But I've had some stories where people have gone to a lender, never even heard of them, and they've run out of money.
Yeah.
They just can't get the money. And you said that institutional backing is...
That's key, because so on the vast majority of our projects, and Ritchie is the vast, and if it wasn't the case, we'd tell the developer. And we find out early on, because we have agreements with our institutions where we don't ask them. We just say, you're investing in this because it falls in policy.
Yes.
When it falls outside policy, again, we don't necessarily ask them. We put the project to them and say, you should really back this.
Yeah.
And there's certain parameters, size of loan and things like that, and size of individual GDVs and all that kind of thing. But the institution comes on board and they will take a minimum of 51% of the loan, which means they fully underwrite the whole loan.
Yeah.
So therefore, if there is a glitch in the market, and if the retail money doesn't turn up for a future raise, they don't have to worry about it because it's guaranteed.
So we've got certainty the money's going to come through. Okay, what do you think? So this interest rate won't necessarily follow through. We had some uncertainty last year. Obviously, we had the change of government.
Yep.
What do you foresee for 2025? Is the confidence more in the marketplace?
Well, the funny thing is, we had the potential interest rate cut. Didn't happen because, if you believe what you hear in the market, the Bank of England would have been foolish to give the cut to the Tories before the election because it would look favourable, all that kind of stuff. Then we have the change in government, as you say. Then we have the interest rate cut. And then it's like, well, okay, we'll wait for the budget now. And then it's like, well, it's getting dark now, so I think we'll wait for the spring. And as a lender, it's quite frustrating. Yeah. It's quite frustrating, but we get it and we understand it because we do the same thing. So fair enough, Now, fortunately for us, our order book is very good. It's very strong. So we've got a lot of projects that are live. There's lots of things happening. But it was a slower year in terms of new loans. Still, pipeline very, very strong, very, very good. Something I found and the team found towards the end of the year, a number of developers coming back to us after a year. and saying, I've revisited this now. I'm ready to really look at this, because the
old projects,
they haven't done anything with them. Just parked them, completely parked them.
So they could have worked, but the confidence is now there to do them.
We'd offered in 2023, we're good to go on this. And then obviously things in the market were changing, the interest rates were going higher, and they were very much, not just yet. We said, fair enough, no problem. Yeah. And we either closed the file or we parked it, depending on what they wanted. And then 24 months later, November 2024, we were getting a call, 12 months later, should I say, getting a call saying, can we revisit this? And we was like, yeah, of course we can. And then in terms of 2025, I personally think we will see some more interest rate cuts. We've got to watch that inflation, obviously. But there is a lot of confidence. It's a massive market. There are so many different types of project you can get involved in. So very much horses for courses. Find what the developer is comfortable with. Make sure we're working together. But for example, we've been back a handful of days. Our business is split into two, just so everyone's aware. If you're using a broker, then you will go through to our broker team. So a specialist broker support team. If you are coming direct to us, then it will come straight through to myself and my colleagues, and we'll look after the direct side of things. On the direct side of things, in the last few days, we've had 4 or 5 acceptances.
Yeah.
They've come back and they've gone, yeah, good to go. Let's do it.
And you see that confidence going into 2025. The government settled down. They've got to build all these homes.
How that's going to happen, I have no idea. But I am personally pleased to see that the 1.5 million over 5 years has come back in. I think it's healthy to have a target. Whether we'll ever hit it is questionable. I think the government have probably, I have read that, if you believe everything you read, of course, there's a big sway towards social housing and helping the homeless, etc. That is really important. I do not doubt that whatsoever. I've worked for a housing association in the past. I can see the great work they do. So I would never question the money going into those sectors. We've got to look after the private sectors as well.
Yes.
And we can do that. Our institutions, our investors, we can do that, no problem whatsoever. We do need, the demand is huge. When I was back as an agent, a friend of mine turned around to me, and he was an office agent, and they'd stopped doing offices during COVID for obvious reasons, and they'd set up a residential arm. And he was in the residential arm. And then they started going back to building offices. And we were chatting about it. He said, what would you do? I can do either or. And I said, well, within reason, an office is an office. Residential, you've got so many different things you can do with it.
Sure.
It's flexible. You can do all sorts of stuff. So I said, you've got to go residential all day long. And I think the market, there's a huge demand, as you know. There's an undersupply, as you know. We'll look at anything. So anything that can convert, anything that can be built, we'll look at it. Absolutely no problem whatsoever. And we need the developers to step forward. And it's the SME developer, the 100 grand to the 10 million, who's going to deliver this.
Yes. Because
land's becoming such a scarce resource. It's funny because a number of years ago, I was talking to one of our developer clients, and he said that he was he'd grown his business very, very well. And he, at that point, was in the market for sites that could take new build, was his thing, 30 to 50 units. He said, because that sits where a lot of people don't sit. That's perfect for me and my business at this stage, which is great. And hats off to him, very successful. And I was chatting to one day, and it was always back in the day that the big residential developers wouldn't look at a site unless it was 200 homes, give or take.
Yeah.
That's what they would do. Now, he said to me one day, he said, I'm really annoyed, and I won't mention the name, but one of the big hitters went for a site he was going for, I think it was for 50 or 60 homes.
They'd come down
because they couldn't find the land. So they'd had to change their tact to try and find sites to develop. And he said, they're not welcome in my patch, kind of thing. But that's how it changes. But that's the beauty of residential. There's so much to do. There's so much work to do. And people who come to us who are going to do assisted living or anything like that, we'll look at all that kind of stuff as well, because we appreciate there's a demand and there's a need. That's our bottom line is, how are you going to pay us back? How are you going to get out of this?
I guess that's quite important.
Yeah, it is.
I guess that's quite important.
And and then let's work together to get to that place. And then ideally, 6 months to go in the project or 3 months to go on the project, I'm having a conversation. Have you got another one? Because we want to go again. Let's go again and again and again. Which is and repeat business is really important to us for obvious reasons.
I love that. I think we've had a great conversation today. I think the fact that it's good to know the money's out there. I can tell people the money's out there, but it's good to hear from you that the money's out there. You've got the institutional backing, which I think is really fundamental, to have that security. And people, you mustn't underestimate that security of having that money to finish your project. As long as you can pay Rupert back, he's happy.
Absolutely.
He's happy. And I think really this important thing, the barrier I want to break down today is for people, is if you're watching this, is to reach out, have this chat. Zoom, of course, only Zoom. You're not going to use any other platforms, are you? But they are available, but we're not worried about those. So you can have a virtual call, a Zoom call with Rupert or a phone call. I think it's reach out and break down those barriers. That's absolutely fantastic. Rupert, thank you for coming in. It's great to see you in. It's great to have a chat. We will get you back again on the show if anything fundamentally happens in the industry out there. And of course, we're going to put all your contact details in the show notes, and you're very happy for people to reach out and speak to you.
Please do. And when we're working on new products all the time, we're hoping to launch a new product this year aimed directly at the smaller developer, because we know the costs are so high, generally speaking, so we're working so hard on that. But please reach out, and if it's a face-to-face you like, let's do a face-to-face. Thank you for having me.
Maybe what we'll do, when that new product is launched, let me know, come back and we'll talk about it here. Let's talk about it first on the Open Door Show.
Brilliant.
Of what that new product's going to be.
It's
Great
a deal.
stuff.
Thank you for having me.
in.
Yeah.
Look, so the money's out there. You know, if you started the show and you're thinking about, is there money out there for property development? It is. It's there in abundance. He's not got it all with him in the car. I am joking, so don't sort of try and track him down on the highway. He's a friendly individual, as you can see. He doesn't mind Zoom. Other platforms, as he says, are available. But please reach out to him. It's about the deal. It's about the professional team. Yes, you've got to go in and go in with confidence. Don't be subservient to that money. The money's out there. If you want to get into property development, it's there, ready for the taking. Hopefully you've enjoyed the show. Please like and subscribe as always, and I'll see you on the next show.